I'm here with Shameel Joosub, who's the CEO of Vodacom, on the occasion of that company's year-end results. These are the results to the end of March of 2014. Shameel, the numbers are solid but sort of unspectacular. How would you characterize the year?
Unspectacular?
Yes.
I thought it was quite spectacular, actually. If I consider that we've now grown the company into close to a 76 billion revenue company with a 27 billion EBITDA. And, if you're looking at our revenue's grown by 8.3%, our EBITDA has grown by 8.2%. Operating profit is just under 8%. So, I think, to be frank, I think it's been quite a solid set of results, especially when one considers against the backdrop of, what some of our competitors have been reporting.
Yeah, we'll talk about the price wars or so-called price wars later on and what the other ones are doing. 57.5 million customers as well. That's also pleasing.
Very much so, and we now. I think what's also particularly pleasing is the growth that we've had in South Africa, 2.3 million net adds during the year, as well as adding over 7 million customers in our international opcos. With 31 million customers now in South Africa and 26 million customers in our international opcos.
It's quite surprising you kept your EBITDA margin nice and steady at 36% as well. How have you managed that?
Well, I think firstly, obviously, it was boosted by the revenue, but also a very strong cost discipline program, which helped us to keep OPEX flat.
The South African business last time we spoke was flattish, I suppose is the best way to describe it, but it's growing again. That also must be very pleasing for you.
It is, because if one looks at, remember that numbers include a MTR decline, which is your mobile termination rates. And effectively, if we hadn't had the mobile termination rate decline, then the business underlying performance is 3% up, which I think is very encouraging. And so we're quite pleased with it. And also, we've deliberately taken the decision to go for lower service revenue growth as we push through our price transformation program.
Yeah. The MTR story dominated our last conversation. Can you sort of wrap up what's been going on since we last spoke?
Well, not too much, actually. Ever since the court decision, which effectively delayed the implementation of what the decision was, and used the proposed rates as an interim measure. There's ICASA now has to basically publish the way forward, and then start engaging with us on the cost models and so on to meet the deadlines that have been set.
Let's go on to the price war now, because we have to. One of your competitors has come in with great fanfare with a 66-cent rate. But if you have a look at your rates, I think I'm correct in saying that your prepaid customers have an effective rate of lower than that, 55. So I don't know what the big fuss is about.
To be frank, I think what we're doing is making sure we're responding to it. On the one side, we've done some matching, if you like. But more importantly, we think we have the best competitive offer in the market because of the bundle strategy that we've been deploying. So, you can buy a 1 hour of talk time for as little as 7 cents a minute. Or you can buy for 2 rand, you can pay, you get 10 minutes and time-based. And effectively, you're paying 20 cents a minute. So you're right, there's a lot of fanfare, if you like, but the reality is that our prices, and we've got much more effective pricing out there.
The data story continues to astound. Every time that we speak or I have a look at anyone's results, it seems that data is going at this incredible clip to the upside, but even it seems to be accelerating rather than leveling off.
Very much so, and we're seeing it based both in South Africa and our international, with South Africa having grown by 80% in terms of data volumes, international traffic more than doubling. So the data volumes are growing superbly, and that's also transporting back into revenue. So we've seen a 24% growth in data revenue and 32% in the group, which we're quite pleased about.
And prices coming down as well, which is great for the consumer.
Exactly. So, and on top of that, you've had a 24% decrease in the effective price per meg.
How do you offset the falling prices, which are inevitable in a competitive business? How do you offset those falling prices? Is it through a network investment? How does it work?
Well, I think the important thing and the strategy that we've deployed is to first say, look, what's important is that you invest in the network. So what we're doing is we're investing heavily in our networks, increasing the capacity, and at the same time making sure that we can enhance our leadership position, quality and coverage and so on. But mainly to make sure that we have sufficient capacity. Once we've added the capacity, we're then creating smart pricing and then driving the prices down and trying to hold on to the ARPU by giving the customers a lot more value. And in doing that, we get what we call elasticity. And so what we need to do is to make sure that the decline is offset by a requisite increase in traffic. And we get that right. So, and I think that's what's been good. So we've had on prepaid, we'd have a close to 24% price decrease, offset by 21% traffic increase. So your decline becomes much smaller. And then you're using data, which is growing at 23%, 24%, to further offset the decline. And that's how you'll end up with a 0.3% service revenue growth.
And of course, this is all to do with Capex, and you've been very, very expansive in your Capex program. Tell us about the year and also what your intentions are in the future.
Well, I mean, this year we spent 10.8 billion, almost 7 billion in South Africa, and the rest in our international opcos. And but what we intend doing is increasing that by more than 20% next year, so that we land up spending close to 9 billion in South Africa and 4 billion in our international opco. So we'll be spending about 13 billion rand next year in terms of Capex investment, which is ramping up we're ramping up our investment from 14% of revenue to 17% of revenue, which is quite substantial. So, what we're doing is, I think one of the clear areas of leadership, if you want to lead in the market, you've got to lead on network, because it's a capital-intensive business. And I think that's really been our strategy, both in South Africa and in our international operations.
Would you say that you're ahead of the competition in that regard?
Very much so, very much so. And I think not having too many countries on our plate, I think it gives us the flexibility to invest properly in the countries that we're in.
Talk about the international markets now, because they've also been kind to you. As you say, not that many countries, but the performance has been good.
Yeah, 23.7% rise in revenue, 55% increase in EBITDA, becoming a more and more meaningful part of both our revenue and EBITDA as we go forward. So, almost 16% of our EBITDA now coming from the international segment. So I think, a really impressive performance for us.
And M-Pesa doing well. I think there was a billion, I saw a figure, $1 billion worth of transactions in what time period, I can't remember, but it's being taken up so beautifully.
It's a billion transactions a month now, in $1 billion of transactions. That's 10 billion rand per month in transactions, which would make a nice small bank, if you like.
Yes.
And it's just becoming more impressive, especially the ecosystem. In that, what we've managed to do is to get suppliers, utilities, employers, and so on, to all utilize M-Pesa to pay their staff, to collect money and so on. So that's been very successful.
Before we get on to Neotel, I want to talk again about an aspect of the price wars saga. Do customers really want or need a flat rate? Isn't there a way to do it where the network is used more intelligently? In other words, non-critical activity in non-peak times. Is that a truism?
Well, I think what's more important, I think people, what we do that, we have products that do that, but basically what we're trying to achieve now is to make sure that you can have a rate through the day and that people are unrestricted to a particular time of day. And that's why I think our new plans are so innovative on the one side, but also provide much better value. So, you can pay, as I was saying, as little as 7 cents a minute. In terms of utilizing, or in terms of in the bundle.
Yes.
And I think so that drives down costs. We're doing the same on data. And yes, we are giving offers, where we give more data in off-peak times and so on. But I think the important thing is to have offers that basically you can use throughout the day.
Now Neotel is going to become a subsidiary of Vodacom. Why has this been such an important acquisition for you?
Well, I think one of the things that we're doing as well is looking at in country and seeing what are the growth opportunities in each of the countries that we operate in. So, and I think one of the clear opportunities in South Africa, which was fast becoming a more mature story, yes, is really the enterprise segment and the data segment, which we saw as big growth areas. And in the enterprise segment, also with the low fixed penetration in this country, there's definitely an opportunity. On the one side. The other side is that we've been building out a lot of our own fiber as we prepare for 4G. So that also puts us in a much better position. If you take the combined essence of Neotel and Vodacom, I think you've got a much more formidable fixed player that can make a meaningful difference in the market and really also be a proper second network operator, if you like. There's a lot of synergies between the two companies. I mean, we've created a lot of products. They've got a lot of they've got 15,000 kilometers of fiber. You overlap the two, and suddenly you've got a serious player.
Also keeping you ahead of the competition.
Correct.
Yeah.
They also got spectrum, which helps with our data ambitions.
That's essential for LTE, isn't it? The spectrum offering. Yeah. Right. Finally, what message would you give to stakeholders, shareholders, staff, and indeed customers?
Well, I think, firstly, from a staff perspective, one would say very, very well done to the staff. I think a solid set of results, and I think I can be very pleased in the achievements that we've achieved this year. To the customers, I'd say a big transformation, a lot more innovation, prices coming down. I think you can see it in every year. Prices effectively coming down. So our commitment to bring pricing down is clear. I think also our commitment in terms of making sure that we have a superior network and sufficient capacity and constantly enhancing our network is there. So I think the customers that are on Vodacom can feel very proud that we are investing, we are growing to ensure that we provide them with a better service. To our stakeholders, a solid set of results. I think they should be quite pleased. Dividends intact, or impressive dividend once again. And really, I think a solid platform to sustain the growth going forward, both in terms of investment, increasing our stakes in Tanzania, and also with the acquisition of Neotel.
Very good. Shameel, thanks very much for your time. That's Shameel Joosub, who's the CEO of Vodacom.